Hello, I'm John Gerspach, Chief Financial Officer of Citigroup. This morning, we reported results for the second quarter of 2012, and I'd like to take a few moments to go through them with you. In this quarter, Citigroup earned $2.9 billion, or 95 cents per diluted share, both levels unchanged from the prior quarter. We also logged credit and debt valuation adjustments and took a small loss on the sale of our investment in the Turkish bank Akbank. When those are excluded, our earnings rise to $3.1 billion, or $1 per share. In our core businesses in Citicorp, excluding CVA, DVA, and the sale of Akbank, revenues of $17.8 billion were flat year over year. However, on a constant dollar basis, which excludes the impact of changes in foreign currency valuation, they were 5% higher than the prior year. Profits for the quarter were $4.2 billion. Expenses declined 3%, and for the second straight quarter, we achieved positive operating leverage in all three of our core businesses. In securities and banking, revenues were up 2%, with expenses down 5%. In transaction services, revenues rose 6%, but expenses only increased 2%. And in global consumer banking, revenues increased by 2% and expenses by 1%. For the sixth consecutive quarter, we grew loans year over year in every business in Citicorp. Total Citicorp loans grew 10%, with consumer up 2%, and corporate loans up 22%. On a constant dollar basis, Citicorp loans grew 13%, with consumer up 5%. Our earnings are diversified across the franchise, with a growing contribution from consumer and transaction services. Excluding the impact of the net release of loan loss reserves, on a trailing 12-month basis through the second quarter, consumer banking generated 46% of Citicorp's earnings, and, together with transaction services, these businesses represented nearly three-quarters of our pre-tax profits. We continue to see progress in our North America consumer franchise. Total revenues of $5.1 billion were up 4% versus last year, largely driven by higher revenues associated with our mortgage loan business. Earnings before tax, excluding the impact of loan loss reserves, grew to $1.2 billion. Average deposits grew for the fifth consecutive quarter, up 5% year over year, including double-digit growth in checking account balances. In branded cards, accounts also grew for the fifth consecutive quarter, up 5% year over year. And across our entire cards portfolio, net credit margins continued to expand year over year. Despite a challenging environment, most drivers for international consumer banking continued to grow in the second quarter. Earnings before tax, excluding the impact of loan loss reserves, grew 3% year over year to $1.1 billion. Accounts grew 6% year over year. And on a constant dollar basis, we grew average deposits, average loans, and purchase sales in every region. In our securities and banking business, while revenues of $5.2 billion were down 2% from last year, net income, excluding CVA, DVA, grew 16% to $1.3 billion. Overall, our wallet share in investment banking has improved year to date in all major products. Lending revenues of $608 million were up significantly versus prior periods. Year over year, loan growth and improved spreads drove higher net interest revenues. And we had $42 million of gains on lending hedges this quarter, compared to a loss of $85 million last year. Transaction services reported revenues 5% higher than last year. Our Treasury and Trade Solutions business was up 9%, driven by strong growth in deposits and trade loans. Securities and Fund Services was down 6% year over year on lower market volumes. However, revenues did show an increase from the first quarter. The drivers for transaction services continued to show strong momentum. End-of-period trade loans were up over 50% from the prior year, and average deposits were up 8%. We also continued to make progress reducing assets in our Citi Holdings segment. At the end of the quarter, holdings accounted for just under 10% of total Citigroup assets, down $18 billion during the quarter and $74 billion, or 28%, year over year. Our capital strength remains among the highest in the industry. At the end of the second quarter, our Tier 1 common ratio was 12.7% under Basel I and an estimated 7.9% under Basel III. We still expect to exceed 8% under Basel III later this year. And Citi continues to be highly liquid, holding more than $400 billion in cash and government securities. This quarter's results show once again that our strategy is working and that the investments we have made are paying off. The economic environment remains difficult and uncertainty still looms in the U.S., in Europe, and in certain key emerging markets. We are managing our risk carefully, maintaining a strong and liquid balance sheet and right-sizing our businesses while enhancing our ability to serve clients. To get more in-depth information on today's earnings report, please visit Citi's Investor Relations webpage, linked below this video. Thank you once again for your interest in Citi, and I look forward to reviewing our third quarter results with you in October.